The share price of Microsoft has been a solid performer over the years. It is up by more than a third over the last 12 months, but given the disappointing performance since its earnings came out, is the market view that actually now it's fully valued. I thought it'd be really interesting to take a look at Microsoft. I've got here the chart going back to the end of 2019. Of course, like most stocks, it took a hit into March 2020. Since then, we've seen the price rally out and recover. We saw fresh all-time highs in April, but the earnings came out and it sold off. It got hit since then, so we're trading just below those all-time highs at the moment. So I thought, well, let's take a look at those earnings for Microsoft. What happened? Did it beat expectations? Look at the big levels, then come back onto this platform and take a look at things in a bit more detail, because responses to earnings can be, fairly short-term focused, knee-jerk reaction. Does it really change the bigger picture? And it's a great trend for Microsoft, as you'll see in a few minutes. So let me talk a bit about what's been happening lately, then we'll come back and look at things in more detail. Hello, I'm David Jones from Capital.com, and I thought this time around we'd take a look at a tech giant that's been around for longer than most tech giants, and that's the stock price of Microsoft. We had earnings in April, perhaps a disappointing performance since then, but I thought, as usual, let's take a look at some of the recent news, then jump back onto the platform and take a look at things from a charting and technical analysis point of view. If you're watching this and you haven't subscribed, if you could click on subscribe, it's a new channel for us. It does help support the channel, and it means we can continue to push out 3 different videos every week on the different stocks that we look at. Right, let's get into it and look at Microsoft in a bit more detail. So it was founded back in 1975 by Paul Allen and, of course, Bill Gates, and it came to the market, so it IPO'd. You could start buying the shares from 1986. If you're not sure who Microsoft are, they are, of course, well known for their Windows operating system, the Office suite of applications, Internet Explorer, but perhaps not so much for that these days, and, of course, the Xbox as well, the gaming console. So fingers in lots of different pies as a business. It's been a great few years for long-term holders. If we went back to June 2016, the share price since then has increased more than 5-fold. And of course, over the last year, plenty of tech stocks have had something of a boost. Microsoft is no exception. So it's 12 months performance. The stock is up by around 37%. As I said at the beginning, we had the latest quarterly earnings release for Microsoft at the end of April. And the company beat expectations by about 10%. The market was expecting earnings for the quarter of around $1.78 per share. But the earnings came in at $1.95, so comfortably beating market forecasts there. It was helped by gains in PC sales over that latest quarter. If we wound things back to the quarter from a year previously, there had been a shortage of PCs due to, of course, the coronavirus pandemic. So something of a bounce back there, helping perhaps its hardware and software operating system business, and of course, Office as well. But despite the company beating expectations on that release in April, the stock price did get hit quite heavily over the next few weeks. It's still trading just below where it was as those earnings came out. So what does this mean? Does the market think that Microsoft is fully valued at the current levels, or actually are there still more gains to come? We'll take a look at the technical view in a second. First of all, let's talk about the levels to watch. I think that the first obvious target, if we're looking for upside targets, is the all-time high, just from a couple of months ago. That comes in at $263 a share. After that, I think we're looking at just psychological levels, $275, then $300 a share. On the downside, lots of support left on the way up. Clearly, the most recent support for me is the low hit after the earnings, about 2 or 3 weeks after the earnings, at $238 a share. Back in May. But as usual, let's put some color on these numbers. Let's take a look on the platform at the chart and see what the technicals look like. I thought to start things off, let's look at the big picture view for Microsoft. I said over the last 5 years, it had gone up more than 5-fold. And you can see if we went back to the beginning of 2016, the stock was about $53 a share. And here we are now trading at $260. A great trend over the years, clearly wobbles along the ways and sell-off along the ways. But overall, the trend in Microsoft has been clearly up. Let's flip things back to a daily chart. As usual, I thought let's put a 20-day moving average on here. So moving averages are a classic trend-following approach to markets. When the price, as we go back here to March of 2020, when the price moves above the moving average, technical analysts normally consider it a buy signal. When it falls below, like it did up here, end of April, then it's considered a sell signal. So the latest signal we had off the moving average, you can see it here, just at the beginning of June. The price moves, as the price moves through $250 for the stock, moves above the moving average and generates a buy signal. So it'll be interesting to see how far this swing can go from here. We'll take a look at the price action in a second. Let's take a look at the RSI down here. So the RSI, overbought, oversold signal. So it tries to time the turning points in the market with various degrees of success. The last signal we had off the RSI, it worked pretty well. It's the mid-May lows with the price trading down below $240 a share briefly. The RSI goes oversold. And since then, we have seen that price build a base down there around 240 and prove to be something of a springboard back up. But what I'd like to look at, as usual, is the trend. So let's put a trend line on Microsoft. I think at the moment, the trend line off those March 2020 lows looks something like that. And we have seen it during May, sort of probe through this trend line, not actually spend that much time below it, which again, some technical analysts will consider a positive sign. Just because a trend line breaks doesn't necessarily mean that trend is going to change. And the definition of an uptrend is a succession of higher highs and higher lows. We've definitely got that. The all-time high we saw in April, up at 263. We've had a low since then, but it has been higher than that previous low in March. So for me, technically, we do still have an uptrend in Microsoft. So when it comes to targets, what would a technical analyst be looking at? Well, I think the first logical one would be to see whether the price can get back to $263 a share. We're not far away from it now. We're less than $4 away from that all-time high at the moment. So I think it could be an interesting few days in Microsoft. If it breaks through 263, some people would consider a breakout like that, classic breakout through highs, as again suggesting that perhaps the share price is finding new momentum up here. On the downside, again for me, I think from a technical point of view, it's only if it turned down and broke below those old lows around $238 a share, would it start to look that, okay, maybe this time that trend really is changing and the risk is for a pushback towards the March lows down around 225. But for now, if we look at the last, 15 months or so, that trend is still up. It's going to be really interesting to see if it can crack 263 and move out to fresh all-time highs again. It is looking a bit overbought on the RSI, so perhaps we see a bit of to and fro trading in Microsoft. But I think as long as that 238 support holds, this trend remains very much intact. That's it for this update in Microsoft. We'll come back to them and see how it fares, see if it can break out to fresh all-time highs from here. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.